Hi and welcome to the Market Alert for Wednesday the 7th of June 2023. So the S&P closes at 23 highs in light trade with RUT and Dixie firmer, so US dollar firmer as well. And the second headline, which is the same, S&P printed its highest close year to date, while R2K rallied on regional bank strength. So no news. And if you look here, you'll see that we've only got the unemployment claims tomorrow. But next week, we get into the heavy stuff. We've got US CPI and also Fed funds rate as well. See whether they're going to increase rates. So that's why the market's fairly quiet, range bound, and pretty boring at the moment. So let's move on, have a look at the Dow and see where the market's traded yesterday. And in the Dow, we traded down to 38% retracement that we drew in from there to there. And you can see the market finding support there at the low of this area and then moving up overnight. It needs to take out these areas if prices are to move higher. In the 30-minute chart, you can see how sideways the Dow was yesterday, very, very sideways in the pre-market. Managed to go up 100 points and then back down 100 points and then down a further. So a good range of 200 points there, but you see the market coming off the S1 and overnight the market sitting on the close there. In the implied volatility, this moving lower as well, again indicating that there is a correction on the horizon. Like I say, it's not definitive by any means, but it gives you a heads up that there is something coming down the line. Maybe it's next week with the interest rates and the CPI. Who knows? There could be a surprise in either of those. Will send the markets to the downside. But the implied volatility coming down to a very interesting low, because we've not seen these lows for a long time. 2021, I think, and 2020, they're 1104, just before the COVID pandemic there, where the market sold off and the implied volatility shot through the roof. But even so, still minor corrections throughout these areas here. Well, it's actually more than minor, because this is a chart of all of those daily movements, and they're big moves. You know, as you can see from there, 36 to 44, 2,000 point moves. It doesn't look a lot, but it is. It's huge. So yeah, an important thing there to keep in mind, that we are looking for a correction in this market. At the moment, the market's allowed to go up because nobody wants to sell into it, and it's treading water, waiting for the CPI next week and the US Fed funds rate, see whether it's going to increase or not. And in the German DAX, also you can see the market coming off 38% and also the previous day's low during yesterday's session. If we look at the 30-minute, as I said yesterday, watch the low. Well, the market, when it opened, it came back down to the low. Kicked off, came back and retested this area twice, and then moved up with the Dow in the afternoon. Nice move to the upside there. And in the 5-minute chart, if we just drag it across, you will see this first activity yesterday morning, where the market, you can see there the low, market came up, came back. And if we just draw in the retracements there, you will see that the market pulled back to 78% the low, oversold, and then we moved to the upside. Not for a great deal of points, about 70 points, and then the market started to make its way back down to the close. You can see this was retested in the morning, and then in the afternoon, I say the market moving highest from the start, with the Dow, and then continuing to move up. And overnight, prices coming back towards the DP there at the moment. We've got the DP down here, we've got the 200 MA in the way there as well. So what we're looking for is some sort of support in this sort of area. You can see the 78.89 is the 200 MA. If we go through that, we're likely to test the DP and then see some sort of a bounce. So yesterday's trades, total for the week 443.50, profit factor 3.35, and we're looking at 63 to 37 there on the win-loss ratio. So far so good this week. Last week was about 600 quid, so we're only up to Wednesday this week. It should be interesting to see how we get on today. And as ever, I'll keep you posted in the alert. So let's move on and have a look at the S&P 500. So in the S&P 500, still moving to the upside, as they said in the headlines there. You can see that we're moving back up. We looked at the monthly chart yesterday, and you can see that there's just drawing some fibs from the top to here. Long-term fibs with a 62% retracement. We've also got resistance to the left there as well. So in theory, we've got an 89% retracement inside of there also, where we could see a bit of weakness. Need to drive through that though if you want to move back to the upside. And it's incredible to think that what's going on with the war and everything else in the background of this market is doing what it's doing, or any of the markets. But they're ignoring it all, particularly after yesterday's events with Russia, Ukraine. Let me just go to the 30-minute S&P. You can see we were sideways, and then the electronic market prices picking up from the low, shot through, took out the stops, and then brought the market back. You've got your retracement in there for the long side, and also you've got retracement in there for the market to pull back to the close. So they're all there if you look for them, and then we've seen the market move up and pull back. And at the moment, we're stuck at yesterday's high. So as I've said all week with the S&P, it seems to be the stronger of the markets at the moment. UK 100 stuck in a sideways range, which you can see there, stuck at the 62% retracement. Nothing much else to report there. We're heading towards being overbought in this market. 30-minute chart, we moved down yesterday. Again, 30 minutes where we took out the low and then we reversed it and brought it back off the S1. And you can see the low and the close there, how important it is. The market moving higher off this in the afternoon. Looks like we're heading for a bit of a shakeout down towards the DP so far this morning in all markets, including the DAX, and then move back later. In the currencies, we've got the GBP JPY sideways to lower, coming back towards that 78% retracement. 30-minute chart was nice yesterday. We moved down to the low and the S1, and guess what? We find some buyers coming back in at this level, bringing the market back up. Run out of steam with a 78% retracement, overbought, crossover, 200 MA above. We're sitting at the DP there. It's trying to hold, but then as soon as it turns red, we get below the BRN, and we've made our way down overnight. However, we've got a double bottom there at the moment where the market's trying to find some support, but don't be surprised if we have a shakeout down to yesterday's low, and then you see the market move back to the upside. In the pound, also stuck in a sideways range in the daily chart. So in the 30-minute chart, we see the market moving lower, down to the BRN, which is a psychological level of 124. That's what this line is, $1.24. We then get the retracement, and the markets move back up. Overnight, stuck in a sideways range, which this market, along with the others, seems to have broken the DP. There's your low for a shakeout as well, similar to the GBP JPY. And in the US dollar, bit of strength there yesterday, and also overnight, dollar sideways to higher, continuing to show that strength. No doubt the headlines from the war yesterday of breaking the dam has had some influence on this as well. So let's have a look at the metals reaction to this. And in the silver market, stuck in a sideways range here at the moment. Not a lot to report, bit of demand for yesterday. No doubt silver will have a shakeout to the downside first before moving to the upside. Bit like what we saw yesterday. No news yesterday, apart from the war. Whether this is a result of that, I don't know. But it's more likely to be the London fix. What time is this? 1:30. Yeah, say no more. So 1:30, COMEX, and shakeout by the banks, take the profits, bring it back up. Again, this also below the DP as well at the moment. So the low again could be targeted by 1:30 by the manipulators. Gold sideways to higher, looking a bit stronger than silver. But in the 30-minute chart, again, you see that shakeout not mid-morning, just before the US opens, an hour before, where you get the shakeout, and then they brought the market back there. Also, note it's sitting on the 200 MA overnight, and also above the 50 EMA and also the DP there. And finally, gold silver ratio still moving sideways to higher, so silver not as strong as the gold market at the moment. Okay, that will do it for this one. It's Wednesday, no news. Well, the market will have to make its own direction, so we'll see what happens. Don't be surprised if a bit of a shakeout to begin with, and then it regroups and the market moves back up. It could also be very boring and sideways as well, so forewarned is forearmed. Okay, that's it for this one. As ever, thanks for watching. See you in the